Hey, friend, this is Jeff Beck, and I want to kind of introduce myself a little bit and share my story. My story, the reason why I started helping people with life insurance, cancer insurance, and helping them to be able to set up a plan so if something happens, that they would not lose their house. And what got me started in that is my wife, when we were younger, a lot younger, well, I was a lot younger, and she was too. We had three children, all under the age of four. Well, at one point, she was in the hospital, and we found out that she had a rare form of a brain tumor, which was cancer, and she could not work. Needless to say, with that situation, we wound up losing the house. We had bought the house, it was our first home. We were paying extra on it to try to get it paid off. And, the normal things that couples do, and we wound up losing the house. Hmm. So, what I have started doing is I have started helping people set up a plan so if life throws them a curveball, they don't wind up losing their house and being in a financial strait. What I'm going to talk about today is specific insurance for businesses and how they can use it for their business to keep their business going, to plan for uh, estate planning, for tax savings, and stuff like this, and how it can be of a great benefit for the business owner and also for helping them to be able to save their home if something happens, if they're out riding a motorcycle or if they're water skiing and they get in an accident or something and they can't work for a while, then they'll have this emergency fund that a lot of people like to have, like 6 months or a year. They like to have that as an emergency fund where they can take this emergency fund and set it in cash value life insurance that if something happens that they die, not only have they had the emergency fund, but they'll have a life insurance payout to where the house can be paid off or whatever. And I will go into this a little bit more, but first, let's talk about the avenues of estate planning. I mean, the number one thing is you want to have a will. You want to have a will. You've got to have a will. No matter how small your estate is or how big, you got to have a will with everything spelled out. And you need to update it every time a life event happens in your life. Update your will. Children born, marriage, things like that. And then you also want to use life insurance because it's a special treatment for tax savings and trust to help save with your taxes and your estate. You want to have your assets set up to where it looks like you don't own anything and you want to have an attorney do it. Okay. Now, what I want to do is go into the four professionals that you need on your side to help you plan for your business and your future estate for the succession of your business if something happens to you. Because if something happens to you, your business is going to go to your estate, and the business is going to be the highest asset that your estate is going to have. Well, how is that going to work? Now, the the four people that I recommend, and that is recommended, is you need a trust and estate planning attorney, you need a tax accountant, you need a financial planner, and you need an insurance consultant like myself. Now, a lot of insurance consultants doesn't know uh, a lot about how to design some of the insurance policies, And that's what I'll be getting into with you, not in this one, but if we meet, then I will be talking to you. What I'm going over right now is um, just the life insurance benefits for the business owner. And you can also apply this for your friends, but some of these are going to be more toward the business owner, but individuals can use this too. You can get this for your children to help start a college savings fund to where it's not affected by Uncle Sam. It can be used for college or for whatever you need. Now, let's start this off with the one that a lot of people like the most and that a lot of people look into it and use it is for a supplemental tax-free retirement savings. It grows tax-free without any losses like the 401k or the IRA. And like I say, it grows tax free. It pays out tax free when you do it right. No inheritance tax, no estate tax, no income tax. And if you live in a state that has state tax, then you don't have state tax most of the time. It does not affect your Social Security. If you're on Social Security, you don't have to worry about this for every $2 that you make. If you go over a certain amount, every $2 that you make, they're going to take $1 back. And what I recommend to a lot of people is if there's any way you can, if you have an LLC or 1099 or whatever you don't have to give to the government, don't give to the government. Okay. Now, how does this compare to the 401k, the IRA, and the annuity? You don't, you can get to it if you need it. Anytime you need it, you can get it. You can use it. You can access it. You can use it for investment. You can use it for any opportunity that you're going to make money. No access at all. Well, you can access it anytime you want, like I say, and there's no 10% penalty and no tax on top of that if you use it before 59 and a half. Now, I will tell you that I have been dealing with cancer and I've got this money in Social Security, but they won't let me use it to help me fight my cancer. And I've had a cash value life insurance and I've used some of the cash value life insurance. I've used some of the cash value to rent a machine from Australia to help me fight the cancer. And I've also used it to help, with getting stuff to help fight the cancer, along with renting the machine and working with the doctor in Australia. Now, this this life insurance, what it does is it helps to avoid long probates and high expenses going through the probate experience. So the more you can avoid the probate, the better you're going to like it. And this helps to be able to pass money to your family without it going through probate. It does not go through it at all. And then many the family gets it fast as soon as and then it helps them to be able to pay the mortgage, the car payment, or whatever. It gets to them fast, and then that way, if you've passed away, they can use that money to help pay the mortgage so that they don't lose a home. And the like I say, the family gets it. Now, another one I've already gone over is it reduces the taxes. It reduces the taxes. And like I said, you don't have the inheritance tax, the estate tax, the income tax, or the state tax. So you're saving on four different taxes. Now, let me ask you, if you pass 500K or 2 million or 8 million or 900 million or whatever that you've got in the IRA or 401k, how much tax do you think is going to be taken out of that to satisfy these four taxes if they have to pay these four taxes? And how long do you think it's going to take for it to go through probate to where they're going to get the money from the 401k or the IRA? You can use this as a buy-sell agreement for your partner or partners or a new planned owners. Couples can use this to help get through tough times when they lose a partner, and it can be used for partners who buy out the other half and let the spouse move on. You can set up a plan to have someone else buy the business. And not only that, but it helps to pass the business asset easily to the new owner and with multiple exit plans. And then the next one is you can use life insurance to cross insure. And what this means is if you have a person that you know or a business owner that you know that's in your city or even a adjacent city, then you can buy a life insurance for that owner as a buy sale agreement. And then if that owner passes away, or when that owner passes away, you can take that check, that lump sum check that you got from the carrier, and buy the other business with cash and not have to pay taxes on the check that you got from the insurance carrier. Did you get that? Yeah. Right now, you can have an insurance policy on another business owner that you can have a buy sale agreement with, to where if they pass away, you will get a check from the insurance company where you can take that cash or that money and pay for the other business, and it's yours. Now, here's one that a lot of people like this, a lot of business owners like this. What they can do is they can use this as a method to pay their quarterly taxes. What you do is you put the money in, it's got a cash value, and every time it's time to pay your quarterly taxes, you can just take the money out, pay the quarterly taxes, and then within that 3 next months, you can put the money back in, pay the premium, or put in extra. It depends on how the insurance policy is designed. Now, remember, this is the life insurance, so some people won't qualify for it. It all depends on your health, what type of health situation you have. And that brings me to another point. Most of the time, if you buy an insurance policy under $1 million, then you can, the carriers will assign a policy without a medical exam. You don't have to go in and give blood. You don't have to uh, go in and cough or them do it. It's all done by the MIB, Medical Information Bureau, and your prescription report. It's all done electronically. Now, back to the emergency fund or the taxes. Let's cover the taxes. You can use it for the taxes. Like I say, this is something you can do and have life insurance also. multiple ways to do this. One is you can own the life insurance policy yourself, and it can be on yourself. Or you can also have it where the business owns a policy, or the employee, you have a policy on the employee. And you can also use trust to help with managing taxes, that has a life insurance policy that goes to the trust. That way it doesn't go to you, and that helps with passing on money. Now, another thing that you can do is, I've mentioned it before, you can use it as a business emergency fund to help prevent losses. And these funds are accessible anytime you need them. It helps you to be able to have help when you have a slow period, or if you're temporary disabled. It'll pay the bills, pay the debts, and stuff like this. And you can also use it as a golden glove. A lot of people like this as a golden glove, because what they'll do is they'll set up a plan like this for an employee to help them as a benefit to where they will stay and not leave or go somewhere else. And this is beneficial for both. It's a very good incentive, because what can happen is, if both of the employee and the business owner are putting into this life insurance policy that builds cash value, it can also be, toward the end, a retirement, a tax-free retirement. So it's kind of like a pension. It can be three different things at once. There's a lot of benefits to this life insurance with the cash value. Business owners can also have life insurance on key employees. And what this is, it's kind of redundant, but it's not redundant, because if you've got, say you're a business, you got 5 employees, and every employee is very, very important for your business. So what you do is you can take out a business cash value life insurance policy on that employee, and if something happens to him, that they die, the money from the carrier will come directly to the business. And that money will help you to be able to kind of fill that spot, because you're not going to be as productive if you lose an employee. Well, that will help supplement the losses that you're going to have. You're going to have to pay to hire somebody. You'll probably have to pay higher wages, a new era, new day. So it'll help with that. But that's just another one. Okay. You can also use this to buy um, business equipment. If you need to buy new equipment or stuff like that, a copier machine or whatever you might need. And you can also use it as insurance for if uh, somebody's going to be buying your business. If something happens to you, you can have a policy on the new owner, where if something happens to them before they get paid for you, for them to own it, then you'll have a policy on them, and you can have that money coming in. You can also use this as a critical illness idea. When you're fighting a critical illness and you're having to pay high deductibles, or you're paying doctor bills, or if there's a treatment that you want to use and the health insurance won't pay for it, you can use some of this to help. And this insurance will go till you're 120. Okay. And I know, everybody says buy term, buy term. But the thing of it is, it's a great idea. You should have a term insurance and a, a whole life insurance or an IUL, because when that term insurance, I have talked to people that have paid in $60,000 to term insurance. I had a dentist. She had paid, she had insurance for term. She had a term policy for 20 years. She paid in $60,000 for that term policy, right? And at the end of the term, poof, the policy was gone. Okay. And that's what term is. It is cheap, but you know the saying goes, you get what you pay for. Well, that's the case. A term policy. The reason why they write those so cheap is because most of the time, at least maybe 1% of the time, those term policies are used. They're great. They're great if you don't have the whole life. But when that term policy is gone and you go to try to get another policy to cover for your life, to pay the mortgage, if something happens to you, it'll pay the mortgage or whatever. You can't get it. I can't get it. I can't get any insurance because I'm dealing with cancer. I can't get it. All it takes, one doctor's visit, just one doctor's visit will make it to where you can't get insurance, life insurance. So and the dentist, she called me and she was wanting to get a policy because she was wanting to buy a building and the bank wanted her to have a life insurance policy on her so that if something happened, that policy would go to the bank and pay for the building. She couldn't get it. She couldn't get it because in that 20-year period, she had a health issue. And because of that health issue, she couldn't get it. So to me, it's great to have a term policy because it will pay if something happens. But the downside, the cons of the term policy is that most of the time you won't use it. And then after the policy is gone, you can't get insurance because of your health 20 years later. Okay, let's move on. Okay, here's one that a lot of people like, and that is you can use it to get debt free. You can use it to get your business debt free. Okay, you can use it to get your family finances debt free. You can pay off your home, pay off your credit cards, pay off school loans and stuff like that. And it really helps a lot of people get debt free. To me, what I say it's getting debt free on steroids because you people have gotten debt free with 300 and some $1,000, in 5 or 7 years. And when they work the system and they do it right, it makes a big difference. Makes a big difference. Now, you pay extra, pay it off early. You can stockpile all those payments into your retirement program or use it for growing your assets. Now, if you have a 30-year note or a mortgage, whatever you want to call it, if you have a 30-year mortgage and you pay that mortgage off in 7 years, how many years are you going to have of payments that are going to be there where you can do something with that money? 7 years? It's going to be about 23 years. So you're going to have 23 years of house payments that you can put towards your retirement and start saving faster for your retirement. You're going to have better life because you won't be so tied to the 9 to 5. You can have money, you can invest it to where you're going to make money. You can start building for your retirement. If you have an asset bucket like a 401k, you can put more in your 401k. What you want to do is you want to diversify. Don't put all your eggs in one basket. You can have some in a 401k, some in an IRA, some in a Roth. Put some in a Roth. And what you should do is when you look at this as a life insurance policy married to a Roth, because that's great. Okay. And uh, how would you like to have someone paying you house payments, giving you a house payment when you're in retirement? You can have that money coming to you in retirement. I could say something here, or they could be giving you cash for the rent. That's all I'll say. Okay. All of these ideas can be used in sometimes one policy if you want to. I mean, I'm gonna show you some designs that I've set up for this video. Life insurance will make sure your children get something when you pass away, even if you are remarried. How many times have you heard of children not getting anything from their dad or their mom when they pass away, and their new spouse gets it all? Well, this will help to ensure that your children get something. What happens if you don't have a will or an updated one? Oh, ones that aren't updated really cost families a fortune. If you don't have a will, the state will get your estate or divide it up a way you don't want to. If not updated, it could spend years in limbo. Okay. And keep this in mind. Some prenuptials do not stand in a probate. Make sure you have a fantastic lawyer. Okay, here's some estates that took quite a while. Roman Bloom's $40 million estate went to New York State because he didn't have a will. Howard Hughes's estate was 34 years in probate. 34 years. James Brown estate took 15 years to settle. 15. Make sure you have a will and an estate plan. Hundreds of businesses use this idea along with major banks. Major banks. I mean big businesses and big banks. Some banks have $22 billion in it. Okay. Now, I work by appointment. I'll put a link to my calendar in the description section. Click the link and set up a time slot. It won't hurt. I mean, you can put whatever you want in here sometimes. So you know we will be talking about your health, and we'll talk about your finances along with what you want to accomplish for your financial future. I do this to help set up your plan that will best suit you and what will help you accomplish what you want to accomplish with this life insurance program. You can put in $300 a month. You can put in $400 a month, $1,500 a month, $2,000 a month if you want. You can put up to $100,000 a year in here. And I'll link a video with this video that will go over more of the dynamics of this and what all it entails. I just want to go through this kind of quickly, give you a brief idea of what it can do. You can even deposit a lump sum the first year to jumpstart using it to pay your quarterly taxes. Okay. Now, what I want to do is I want to share with you, I want to share my screen with you so you can see so you can see more about what I'm talking about. Okay. Now, let me move my picture down here. Okay, this fella is paying in $500 a month, so that totals $6,000 a year. Okay, and he was just wanting to get as much life insurance as he possibly could. He wasn't in for the cash value. He was just wanting to get a policy that would pay if something happened to him. So he got this policy. He was paying in six grand. Look at this top line right here. Now, what I like to do is I like to go by this middle column. This will give you an average of 4.75. Some years it'll be more, some years it won't. But it most of the time it'll be up here. But I like to do is I like to stay with this. That way it gives you a better idea of what you can do. So he's paid in 6 grand and he's got cash value of $3,738. So he can use that. And this is just and you can see that he's paid in 60,000, but his cash value is 45. Now, like I say, he was not in it for building the cash value. He just wanted the most insurance that he could get for the money. He was more into the life insurance than the building cash value. Okay. Now, I want you to compare this with this one. Now, this fella, oh, hold on. This fella, his idea was he wanted it for the cash value. Okay. He wanted it to start building strong. Okay. You'll notice that with this one, let's look at this top column. This top row right here. If we go off of this, for 4.75, his cash value is $4,710, right? And he's putting in $6,000 for the year. But his policy starts off at $196,000, which is low, okay? But that's what he wanted to do. He wanted to be able to have more in his cash value and have it growing faster and grow more. So that's what he did. And as you notice, if you notice this column over here, you notice this column over here on the right, every year his life insurance amount goes up and it keeps going up. And so does his cash value. It goes up and it goes up all the way. Okay. Now let's look at this one. This one, he decided that he wanted to put in a lump sum of $28,000, more than $28,000 every year. Okay. And he wanted the cash value to build up fast so that he could use this for his emergency fund and to help pay the quarterly taxes. So he puts in $28,000 and he has $24,000 potentially in his cash value. Okay. Now you can't take the whole $24,000 out. Okay. You can't borrow it all, but you can take out a percentage of it, almost all of it, but not all of it. And this is a very important point here. When you take out from this $24,000 cash value, you do not take the money from your cash value. You take the money from the carrier, and the carrier uses your death benefit as the collateral. Okay? Are you with me? Okay, let me say that again. If you've got $24,000 in your cash value account, when you take out money from that cash value to pay your quarterly taxes, or you're using it as an emergency fund, and you take out of there to pay your rent or your mortgage for your business building or something like that because you've had a low month, you do not take it out of the cash value. You get it from the carrier's money. The carrier will loan you their money and they will use your death benefit as collateral. So what you're doing is, and this is why a lot of people like this as getting debt free on steroids, you're making a compounded interest off of your $24,000. Plus, you got, let's say you take $20,000 out of it or $18,000 out of it because you want to pay off your credit cards, or you want to pay off a car, or you want to buy a new machine for your business or something like that. Well, what you do is you're making money off of that. And what most people do is they will pay the percentage that they would have normally paid the bank or the credit card or whatever, and they will put it back into their cash value. That way it builds the cash value fast. And they don't have to pay the credit card the high interest rate, or they don't wind up losing the house because the bank, they can't pay a couple of payments or 2 or 3 payments or 6-month payment. This is why a lot of people like this. Okay, they use this as their emergency fund. And not only is it their emergency fund, like I've said before, but if something happens that they pass away, then that emergency fund blossoms into $574,000. And what bank do you know, if you've got $20,000 or $24,000 in their savings account, will turn around and give you or your family $574,000 if you pass away? No bank will do that. No bank. That's why people love. And in 2019, business owners and people put in over $2 billion into this because they liked it so well. Now here's another one I want to share with you. This one, he decided that he was going to put in $300 a month. So he put in $300 a month, and his life insurance policy was, and he wanted the to grow the cash value faster. So he reduced his death benefit and put more into his cash value to where it builds faster. And as you see, every year his death benefit goes up and up and up. And here's some numbers. He's paid in $90,000 and his potential is 185,000 plus 299.94. Okay, I want to iterate here something that I've heard about not using or not putting into a life insurance policy because, well, you should put it into annuity, you should buy term and invest the difference. Well, that's true. You can buy term and invest the difference, but a lot of times people don't buy term and invest the difference. And besides, this is something that just blossoms. And with the IRA, 401k, or annuity, you can't access that money. Okay? You can't access that money until you're 65 and a half. And then if you, and I'm not telling you not to have a 401k, okay? You should, if you can have a 401k, have a 401k. If your business or you want you want to take your business, start a 401k, and your business matches whatever you want to pay in, that's free money. Get that free money. But remember, the downfall of the 401k and the IRA is it's connected with the stock market. And many people are losing billions in their 401k. And I talked to one lady, she had 900 and some $1,000 and she lost it. A lot of it, she had to go back to work because of the 401k and the IRA. This is why I recommend to people you have to have your different asset buckets. You can have a 401k bucket, a IRA bucket, and you should have a life insurance bucket that's building cash value because you can use this cash value, like I've showed you, anytime you want to. And you can use it to help you get debt free. Once you put money into a 401k, you can't do that. You can't take money out. Well, you can take money out, but you're going to pay a penalty and you're going to pay taxes on it. Okay. And like Warren Buffett said, the number one rule is never lose money. And what's the number two rule? Remember number one rule. So this is something that you can think about. And here's somebody, I just want to show you this one. She put in, or they put in $1,500 a month. Okay. $1,500 a month. That's $18,000 a year. And this person decided to do the same thing. They wanted to build cash value fast. Okay. $18,000 a month and they're getting $596,000. But look at the account value. The account value is $14,034. So they're building cash value quick. And they're also their life insurance amount is growing every year. And they decided that they were going to pay till they're 70 years old. So the amount that they have in their cash value is $1,532,000. That's a good a lump sum, isn't it? All right, I'm going to stop sharing my screen right now. I just wanted to share this with y'all and give you an opportunity to see what all you can use the life insurance for your business to help your business succeed and to help ease your financial burden sometimes when things are going slow. But you can give me a call. I'll put a link to my calendar where you can click on the link and set up a time to meet with me. And I have there's another video that I will link to this one when you finish watching it. That's calling about being debt free. That talks more about it, gives you a little bit more in depth about me and my company and the company that I work with. It also talks about a lot of the dynamics and what codes for the tax codes are for the life insurance. But anyway, you can text me if you like to. My phone number is 615-319-4139. The number again is 615-319-4139. And text me and put in the text cash value or life insurance business help, something like that. Because I'm like you, I screen my calls because I get so many scam calls and stuff like that. So text me. That's the best way to get in touch with me. And what I will do is I will text you back or I will either call you back, okay? Let me give you my phone number again. It's 615-319-4139. Thank you for taking the time to watch the video, and I look forward to helping you set up a plan so if life throws you a curveball, you don't wind up losing the house like my wife and I did. Thanks.